just for my own personal taste. I want to see what it looks like on a 60-minute chart. 4 hour. Right here. Into the afternoon and into overnight going into tomorrow. You want to have this that sell side and then this buy side and balance, sell side and efficiency. What is going to be important for me, now this is me taking Caleb out of the equation just for the sake of him and all of you watching. This delivery here on that one single candle overlaps this single candle right there. Normally, this would be viewed as a balanced price range because it's offered sell side. And then over here, it starts at the same level here, buy side's been offered. So this range is sent lower and back up. So it's offered both sides. If it starts to go into this and it's doing it with speed, then we have changed in a degree that's going to start sending us lower for weeks, not just a day or two. So that's what I'm using this information here. I want to see if we can get into this area. Is it doing it fast? Because it should not do it fast. So you look at this and say, oh yeah, this is one of those areas where it's open traffic. Okay, it's going to be easy for price to get down into that. Not if you're looking at it at the same time that it's delivered like that. If it does it quick, if it trades down in here and it does it quick, that's indicating that we have turned the corner up here. And then we're probably going to want to trade lower. And that you're losing money when you follow your model. It's measured risk. And it's something that you should be comfortable with if you lose. If you're not ready to accept that, and I'm going to repeat it again because it probably went right over your head. If you're not ready to follow a model, trust that this is the framework in which you're going to engage price, place a stop loss, a real stop loss, not a two-handle stop loss, something that's reasonable that based on the structure in the marketplace you're engaging with. It's reasonable for it to fluctuate around, but if it goes to that stop, you're definitely wrong. That's why most people don't want to use a stop loss, because what are they doing? They're defining a moment in price where they're wrong. And that just cut real deep right now, didn't it? You're uncomfortable. You want to turn the video off. You want to stop watching the stream right now because I just pushed you into a corner like a bully. But you got to recognize that. You got to say, you know what? That's true. So that's an opportunity. How can I correct that? Well, I'm glad you asked. You have to learn how to read price action and know what your model is suggesting is likely to occur in price. And you cannot figure that out by watching my videos. You're just getting familiar with it. But you have to watch price action. You have to study it. You have to back test it. You have to log it and get comfortable seeing it many, many, many times. I take losing trades, folks. It's going to happen to you too. But I don't go into a market and think, man, what if I get stopped out? All this stuff's going to go out the window if this trade fails. If this one stops me out, I might as well just throw all this stuff away and just start trading Bollinger Bands. That's never going to happen. But the point is when you're forced to come to the root decision-making catalysts of using a stop loss, a trader without a model, without experience, that should not be trading with real money yet, to implement and use a stop loss, which is what you always should do. You should never be trading without a stop loss, ever. I don't care what anybody tells you. You're an idiot if you're trading without a stop loss. You're literally saying, I don't care how much it wants to hurt me. I'm here for it. That's what you're saying. And that's not somebody that's managing risk right. And that to me is crazy. But if you're saying to yourself, I'm going to implement a stop loss on my trade using the model that I'm trying to engage price with, I'm placing my stop at this price level, whatever it is. When you do that, you're essentially saying, I am wrong if it goes here. And I'm okay with being wrong. And I'm okay paying for this experience. I'm going to college in this trade. I'm going to a seminar that I had to pay a fee for, listening to a professional. Okay. You're using the same logic there. It's costing you something. But that stop loss is doing a whole lot more, isn't it? It's defining the very moment that you, as a man or woman, a trader in the pursuit of success, that you're wrong. And some of you think that you're going to be the person that never does it wrong. So how do you avoid it? Don't use a stop loss. I'm never wrong then. But you're always blowing out. You're always failing your challenges, and you're always losing your funded account. That's what keeps happening because you don't want to use a stop loss. You don't want to admit that you're wrong about that trade idea, and you don't want to use a leverage that is reasonable. That if you do get stopped out, yeah, you're wrong on that trade, and it didn't take more from you, so you can still take another one that could yield easily 3 to 4, 10 times what you just took as a stop loss. But you're not thinking that way initially. You're thinking, I'm going to make money. I want to get a payout. I want to pass the funded account challenge. I want to show everybody my certificate. I want to get handshakes from everybody and attaboys and attagirls on social media. That's what you're trading for. Versus, I want to protect my equity. I want to be in this longer than just today or next week or this month or this summer or this year. And my goals are, I want to be able to replace my income. I want to be able to pay my car note every month on this. I want to be able to pay grocery bill. Not, I want somebody else to tell me I'm doing good. Because doing things in trading for those types of results, you're going to break rules. You're not going to follow your model. You're going to over leverage because you're trying to impress. And I don't want you thinking like that, Caleb. That's why your rules are you can only trade with one contract. That's why you're going to be trading with a micro contract first. Because you're not trying to impress me with how much you're making. I got plenty of money. You know that. I ain't impressed by money. I'm impressed by skill set, following rules, and being responsible. And